Good morning, everyone. A very warm welcome to today's event. I thank Alpha Ideas and NSC for organizing this. It's actually very encouraging to see so many investors on a Saturday morning listening to SME ideas. So it gives us a lot of confidence. It gives us a lot of pleasure. I would like to present our company. Before that, I'll tell you about myself. I'm Ritesh Shaw. I am a chartered accountant by profession. I spent my first few years in investment banking, and I was financial consultant and project consultant for the last 10 years. So I was in US for a while, came back and started this company with my friend Sriram Bagla. So when we started in 2016, we were basically manufacturing the intermediate products for snacks manufacturing companies. It was basically flour-based and corn-based pellets that snacks companies use as a raw material, which they fry and pack. And it is an alternative to potato chips. So this category is called Western snacks. And that is when we started. So I just run you through the presentation. So we are basically catering to the rural markets of Eastern India. It's a fast-moving consumer good. And we have facilities in Asansol, which is on the border of West Bengal and Jharkhand. And we have another facility in Siliguri right now, which is northeast of northern Bengal, and catering to the northeast markets. This is a very high growth landscape. Basically, rural markets have been traditionally catered to by the unorganized manufacturers. Certain challenges and limitations are there. If you look at it from a marketing perspective, the last mile delivery is challenging, wherein larger manufacturers find it difficult to penetrate these markets because of their logistic challenges and warehousing challenges. That is where we saw this opportunity. When we started, what we understood was that this market was now priming up. They were looking at, quality products, but because of low availability in these markets, they were not able to access, quality products, and they had to kind of, satisfy themselves with the local manufacturers. So this rural market is big and it's constantly growing. The unorganized players are getting shifted out with more mechanization happening, with more quality products being offered to the consumers at the same price points. We catering to the 5 rupee price points only as of now. It's a 5 rupee snacking packet. So it's mostly a impulse snacking category, where and our consumers are mostly kids in rural India. So our timeline is basically started in 2016 as an intermediate product manufacturer. In 2020, we started our own brand, Annapurna, and we started packaging with our first facility in Asansol. In 2021, we got into other product categories. We got into potato chips, we got into cupcakes and candies. We have recruited a lot of talent from the FMCG sector, people from Nestle, people from Parle, and ITC have joined us at senior levels, and they have really boosted the entire operations of the company. In 2022, we started a Siliguri manufacturing unit. We came up with our IPO recently, which saw a lot of investor interest. It was very encouraging for us. We raised 30 crores in the IPO. The company got listed on the 27th of September. The issue price was 70 rupees. It got listed at about 120, which was a very good opening for us. And with the IPO money, we are planning to expand our capacities. We're going to look into more markets. We are expanding ourselves into Bihar, Jharkhand, Odisha, and Northeast. So as of now, we have more than 300 distributors. We have 80 super stockists, and we are catering to about 40-50% of the districts in eastern India. So to put it in numbers, as of now, we are selling more than 12 lakh packets a day, and that is distributed across 38 SKUs. It is 25 metric tons of packaged snacks every day that is getting sold. We have 2 manufacturing facilities. We have 6 product lines, and the way we define these product lines are basically, extruded snacks. Then we have potato chips, we have cupcakes, we have namkeen, we have candies. And we are having a retail touch point of more than 5 lakh centers. So this is basically pan shops, gumtis, and kirana shops in the rural parts of India. And I cannot give you the unpublished numbers. The last quarter that we had done was Q1 of 22-23, where we did about 28 crores. This half-year numbers are going to be audited, and we'll release them shortly. And we have more than 400 people employed as of now. So this is basically our product portfolio. So 11 flavors in pellet-based snacks, 3 flavors in extruded snacks, 5 in potato chips, 7 flavors in cupcakes, 6 in namkeen, and 6 in candies. So this product portfolio is basically going to increase dramatically. It's going to be more than 100 SKUs. And we are adding 2 broad categories. We are adding rusk and biscuits as one category. And then we are adding instant noodles, which is again going to be a big volume driver for us. So this is again a very granular representation of all the products that we have. So the facilities that our manufacturing facilities, I'll talk about it a little bit. We have one in Asansol. It's about 1 lakh square feet, where we have a daily production capacity of 15 metric ton. Siliguri is recently started, and we'll see hitting peak production in October end or November first week, when we're expecting it to go from 10 metric tons to 25 metric tons. We are currently outsourcing our cupcakes and candies to other units, to other companies who are manufacturing it on our behalf, which is a very good model for us because it is asset light on the company, and it gives you the ability to explore new product categories without having to spend too much on the capex. So our performance and growth have been phenomenal over the past 2 years. When we started in 2020 in April, we sold about hardly 30 lakhs a month. And from 30 lakhs a month to 11 crores in 2 years has been phenomenal growth for the company. Of the 150 districts, we covered about 80 districts as of now, which we are planning to completely ramp up. We're going to cover all the districts. We are planning to ramp up our distribution base from 300 to 750 by the end of this year. So this is the month-on-month growth. This was from April 2020 to June 2022. The sales have grown even more in the past 3 months, and we're expecting the trend to continue. This is our board. So Shriram Bagla is again a economic graduate, and he's from the financial world as well, but he spent about 6-7 years in FMCG, and he's the one who's set up this entire business. Sumit Sengupta is from Parle. He was the regional head of Eastern India, and he is now on the board of directors. Rajesh Shaw is a tech person from ITC. So he used to look after their SAP FICO module, and he's putting together the entire ERP and DMS software for us. Hitu Gambhir Mahajan is an advertising professional. She has about 20 years in this field, a very well-renowned professional. Sandeep Mehti is again a pioneer in digital marketing. He's worked with companies like Britannia and Adani. Mr. Chandan Ghosh is ex-Nestle, head of their 5 rupee division, the 5 rupee Kit Kat and 5 rupee Maggi. So he's with us right now, and he's going to look after the entire rollout of our instant noodles product portfolio. In the top management team, we have Rahul Sureka, Ravi Sada, Pawan Jaiswal. They are all chartered accountants and experienced in their fields. Rohit Singhania is the marketing head, and Shakil is the company secretary. So the business model is basically about making quality products and putting it into the distribution channel. So the distribution channel, the way it works is you have a super stockist who takes care of a single super stockist takes care of about 5 to 6 distributors, and every distributor takes care of about 500 retail touch points on an average, 500 to 1000. So what you basically have to do is in order to compete. So the way we are competing is we are competing with the large manufacturers, and we are sandwiched between these local manufacturers and the large snacks manufacturing companies. So that is where the challenge is, and that is where the opportunity is for us. Because these distributors in rural India, they are not having access to quality products. Because a company like Britannia, Cracks, or like DFM or Pratap, they have bigger ticket size. They are not in a position to give these distributors a consignment where it is only of about 50,000 or 1 lakh rupee consignment. So because they are delivering in containers, their ticket size is approximately about 3 lakh rupees. And for a local distributor to shell that kind of investment when they start a business is difficult. So they look for alternatives, and they end up with local manufacturers who are willing to give them even 25,000 rupee ticket size as their first investment. So this is where we came in. So what we focused on was that we'll make quality products which would be in sync with what these large manufacturers are making, and we'll give them a price point that the local distributors, that the local manufacturers are giving them. So, and that is a huge market. I mean, that's an orbital shift, because 90% of this market is still catered to by the unorganized manufacturers. And once you have a proper distribution setup and a brand visibility, what happens is that the consumer demand kicks in. And because your product is available in so many outlets across geography, your brand visibility enhances with the passage of time, and after a point of time, it becomes like the most sought after product. So that is what has happened with us. We've managed to put our product in more than 5 lakh retail outlets, and that has been a big plus for us. So the future growth of the company is going to come from the regional growth that is expected. Eastern India has lagged behind most of the time in terms of economic growth, in terms of per capita income, but that is now changing. A lot of growth is happening in that particular geography. The rural income is rising. The demand for more quality products are rising. The demand from local distributors for a bigger portfolio of product is rising. So that is going to drive the future growth of our company. And we are also looking at sectoral growth, which is basically we are adding more SKUs, we are adding more product categories. So from just being a snacks company, we are now a candies and a cupcake, which is a sweet category also. So we have various kinds of snacks. We have Western snacks, we have potato chips, and we have namkeen. Namkeen is a huge category. We've just started manufacturing namkeen, but we expect namkeen to be a much bigger, volume driver in future. Northeastern market is going to be a big focus for us over the next few years. Northeast is basically the 7 states of Northeastern India. These states are rich in population. I mean, the entire Eastern India probably is the most densely populated region in the world, and that is where we are marketing ourselves. northeast of the country, it's changing. The landscape is changing dramatically with more infrastructure coming up, more accessibility, and aspirational levels of the people are increasing. So savory snacks, it was already there, and we have started sweet snacks now. So that is going to be a volume driver. So the path that we have chosen is basically increasing our scale. We are penetrating deeper into the markets, and we are increasing our product portfolio. So it's basically increasing our district penetration. All the districts that still remain uncovered in Eastern India needs to be covered. We have to increase our distribution base, double the capacities, and our product portfolio is going to be increased by at least 3 times. This is how we are stacked up right now in West Bengal. The 2 blue dots are basically the units which are already functioning, and the 2 new ones, the red ones, are the ones which are coming up, where we are using our IPO proceeds to put up these investments. So our total production post the expansion would be about 60 metric tons. And we are also exploring now more opportunities in the contract manufacturing space. Now that we are a listed company and people have more awareness about us, we're getting a lot more offers from people who are willing to, put up facilities just to cater to our demand. So this is a big change for us, which has happened after our listing. A lot of investors, like private investors, have come out and said that they want to put up a facility. Instead of, we having to invest money, they're saying they'll put up the facility and they'll make products for us, which is going to be very asset light for us. And this will help us enhance our capacities even further. We just focus on the branding and the distribution side. So this is what we are doing with the IPO proceeds. And again, about the marketing in West Bengal and northeastern markets. Bihar and Jharkhand are going to be 2 big volume pushers for us. We've already got about 40-50% penetration in these 2 states, and they are very close to where our factories are located. So a 300-kilometer radius from the factory is a sweet spot where we plan on marketing, and these 2 states are right, in that particular radius. So it makes a lot of sense for us to go even deeper into these 2 markets. So we are increasing our brand visibility now. There was little to no marketing that was there in the first 2 years. Now we have started doing television ads and participating in local events like local sports events and local cultural events to enhance our brand visibility. We use only like local, artists and faces which are more familiar with the rural markets as brand ambassadors. To put everything together, because we'll be having like multiple facilities and we'll be having multiple products. So this is basically going to need a lot of IT infrastructure. So we're putting together a DMS, a distributor management system, and an ERP, which will basically talk to each other and tie up together. So the entire growth that we are planning would be captured on this system. So we'll get like real-time order data, accounting data. This is our product portfolio, which is going to get expanded. We are planning to break into the top 10 players in the Indian snacks market over the next few years. I think I would not be able to give numbers to this, but that's what our vision is. And as our social responsibility, we have basically adopted a few villages in West Bengal, wherein the women have been employed to make regional artisanal snacks that are being packaged and sold through the D2C channel. Now, this was started as a CSR activity, but it turned out to be very profitable for us as well. And we realized that D2C is a big opportunity. So we are looking at this particular vertical with a lot of interest. Mr. Sandeep Maiti is driving this entire process. And we are packaging Gohana Boris, which is basically a regional artisanal snacks, and honey, ghee. So we have started, and various kinds of pickles, which are all being manufactured by the women of the villages. We are packaging it and putting it on the shelves of Amazon and Big Basket. Thank you, everybody. Yeah.
So,
Hello.
hi. So thanks for the wonderful presentation.
Thank you.
So 2-3 things. Firstly, you said actually, if I look at your margins at 6-7% EBITDA at this scale,
Right.
is actually pretty astounding, because some of the larger players with much higher scale of 1,000 crore plus revenues are not even doing this kind of margins. So,
Right.
if you can explain that. And secondly, you said you are about a 10-11 crore kind of fixed assets, right? On which you're
Yes.
doing a monthly run rate of about 10 CR.
Right.
So when that 60 million ton capacity comes by December, what will be your fixed assets? Because again, that 8 to 10 times the asset turn, again, that's look very, very impressive.
Yeah.
So just these two things, if you can please explain. Thank you.
Yeah, so about the EBITDA margin, a lot of these larger manufacturers are kind of, the problem that they face is they have too much of automation. And that would also answer your second question. So with this automation, what happens is that if you have to change your, production dynamics and very quickly, that does not happen. So there was an inflationary trend past 2 years. Prices were going up and people were struggling to keep their, EBITDA margins safe. And the advantage for us was that we were using mostly indigenous machinery, and we could change the configuration, the product size or the packet size, the grammage that we were giving in the packet on a very short notice. So what we could do on a weekly basis, it probably took the other manufacturers more than a month or 2 months to react. So we were able to manage that better because of this, more indigenous machinery. It's labor intensive, but it gives you more flexibility in terms of production. And the asset turnover ratio for us is it's approximately 10 times. So which is again a very good number, and that is again because of the indigenous machinery that we are using. We are mostly using Indian and Chinese machinery, and the larger manufacturers, because they have access to more capital and they have more funds, so they go for German and Italian machinery, which is about 6 to 7 times more expensive. So for the same capacity that we have, like a 25 metric ton capacity, at about 12-15 crores, investment would cost us 150 crores if we go for an Italian counterpart.
Okay, thanks. And one more, on the freight side, since you produce locally and you sell in the nearby regions,
Right.
is freight a big component of your cost, and how will it move when you expand, let's say?
So freight is about 8% of the cost, and this is going to go down because the way we are looking at it is we are adding products which are heavier. So most of the products that we have right now are all air, is basically packets. So your consignment size is maximum 90,000 to 1 lakh rupees a container or like a shipment. So when we add more heavier products, like when we are adding candies, we are adding cupcakes, we are adding the other noodles and stuff like that. So your consignment size goes up by 2 times and at the same freight. So it over a period of time, this freight would come down from 8% to approximately 6.5% to 5%.
Thank you so much. Thank you.
Yeah, please. The how the cost is broken up. So the retail price is 5 rupees. We sell at 3.75 to the distributors. So the distributor gets it at his doorstep at 3 rupees 75 paisa. And the 1.25 that is there is basically 25 paisa goes to the distributor and 1 rupee goes to the retailer. One retail outlet sells about 3 to 4 packets a day, and at about 5 lakh retail outlets, you sell about 15 to 20 lakh packets a day. And the costing is at 3.75 that you're selling at. Your cost of product comes to about 3 rupees. So that's basically how it is. Yeah. This is your gross margin. Yes, 75 paisa comes out of that. From the 75 paisa, you get your administrative expenses and your fixed costs. It's all cash sales mostly. It's like 90% of your products are sold on cash basis. Is more the products are delivered to the distributors and they pay up or they pay in advance. Some large distributors are given credit, and that is very limited. It's about 7 to 15 days max to max.
Hi. So there are two questions.
Yeah.
So very happy to learn that all your products are in the vegetarian category.
Yes.
So do you plan to keep it like that?
Yes, it's all going to be vegetarian because snacks is mostly vegetarian.
Okay. Another point is that you have 5 lakhs touch points at the moment.
Yeah.
So where do you see it is going to in next 5 years?
By the end of this year, we're expecting 700 distributors with us, and every distributor would cater to about 1,000 retail outlets. So 7 lakhs is what we're expecting.
But
By the end of this year,
years,
and this would, the plan is to increase it to more than 15 lakhs outlet
next 3, 4, 5 years.
within 2 to 3 years.
Okay, thanks.
Yeah.
Hello. Right here. Hello.
Yeah.
Just two queries I have. Now, sir, at 60 metric ton of capacity per day,
Right.
so at optimum utilization level, what would be our revenue potential there?
This is what we are. This is the optimal, utilization that we are doing.
Annually, what would be our revenue potential at 60 metric ton? Is it 200 crores, 300 crores?
25 metric tons basically translates to 14 lakh rupees a day in turnover.
14 lakhs rupees
A day.
And so my second clarification is you are selling right now 12 lakh packets per day, right? And I think
Yeah, sorry, I was. It's 14 lakhs packets a day, basically.
so 14 lakhs packets a day, and I think more than our 95% product is 5 rupees ticket
5
size.
rupee segment, yeah.
So that effectively translates to about 18 to 20 crores per month, right?
No, you have to take it at 3.75. 5 rupee is the retail price, MRP.
So for 3.75 is what accrues to our.
15 crores is what you'll get.
I understood. Yeah, that's
Yeah.
it from me. Thank you.
Yep. So did I understand you right that your gross margin is about 20%?
Yeah.
So steady state, if your gross margin is 20%,
Yeah.
how much will your advertising and G&A be, steady state?
We didn't have much of an advertising as of now, but we are planning to have a 1% for advertising and branding and 4% as your sales expenses.
And what about corporate G&A?
Around another 4%.
So are you saying that steady state you will be about a 10% EBITDA margin business?
A little, maybe you have to take into account a few more calibrations. There is sales return, so a 1% sales return. So anywhere between 8 to 9% would be good for us.
But so for a food business, would 5% advertising and sales promotion, will that be competitive long term with just 5%?
At our scale, it is. As long as we are in this particular, zone where we are between less than 100 metric tons a day, you're okay.
Okay, and my last question is that in most of the markets where you are the big boys just missing because of their value constraint, minimum order size they want? And is that the reason why you got an opportunity?
There are a number of things. I mean, the bigger players are missing out not only because they are not able to cater to that particular distributor's demand for lower capital, but also, the product are very specific to that particular market. So there are regional tastes that needs to be taken into account. So, and then there are, basically toys and stuff which go into the packet, which for a larger manufacturer is very difficult to manage. So when you're looking at the logistical challenges of putting toys in 15 lakh packets a day, it's huge. Now if you translate it into, for a Pratap, it is 1.5 crore packets a day. So for them it's going to be gigantic. certain things that they cannot do because of their size, where we have the advantage, because we are in a growing space. And once you reach that particular point, you'll also face the same challenges. But as of now, that opportunity is there.
Thank you.
Yeah.
Thank you.
Yeah.
Sir, what is your average employee cost?
Average what?
Employee cost.
Employee cost.
Yes,
It's 50 lakhs.
per employee.
Oh no, average employee cost
Yeah.
would be 20,000.
We are done with the Q&A.
Sir, last question.
Nitin, just one question.
Sir, we cannot keep extending it, so you can
Just
ask him in the networking tea coffee.
A small question.
Nitin, bhai.
Yes, bully.
So, this is a this packaging is non-biodegradable? Non-biodegradable?
Yes.
So you are adding 10 to 12 lakh packets per day as it's a single use as a single use plastic.
Yes.
So you are
this
doing-
is not single-use plastics. This is basically laminates.
It's a laminate and it's a non-biodegradable.
It's non-biodegradable.
So
but
you are recycling them?
It doesn't get recycled. It basically goes into different other industries. Once the packets are, if the packets are in your factory, if they come back, then they go for various kinds of jhadu making and all that stuff.
Not in the factory, but it's
Those that
Mostly
get
in the
thrown
garbage
away in the streets, those are
To add to what is there any legal obligation
No,
for
no,
to
no.
process the plastic?
no.
No?
No.
Okay. Any further questions? We'll be there in the networking tea coffee
Yeah.
and you can ask over that. Thank you so much.
Thank you so
Please wait.
Thank you, sir.
Hemant Garodia ji of Invicta Capital, please.